Hello, Namaskar, Sat Sri Akal, Namaste and Adab to one and all present here. I, Sairam Khond, the MOC for this workshop on GST compliances training for articles in CA offices, Series 1 virtually. Day 3, welcome you all on the day 3 on the topic supply, including exempt, mix, composite, and non-GST. Moving further, I request CA Sharad Tuwani sir, the chairman of HL Karanji branch Vikasa, to present his opening remarks for the session. Over to you, sir.
Good morning, everyone. GST compliance training for article for office. First of all, I would like to take opportunity to thank Pune branch and Pune Vikasa to jointly holding this session with us and many other branches. आज का जो सेशन है सप्लाई जीएसटी का जो क्रक्स है उसके ऊपर है, जो संदीप सर आपके साथ बहुत अच्छा नॉलेज शेयर करने वाले हैं। मैं यही चाहूंगा कि हर स्टूडेंट आज यहाँ से बहुत कुछ सीख के जाए, खुद को वेल इक्विप करके जाए, स्किल एनहांस करके जाए, और जो भी आपके मन में डाउट आए वो सर के साथ शेयर करें, जिससे ये सब अच्छा होगा। मैं वापस से पुणे ब्रांच को थैंक्स करना चाहूंगा कि उन्होंने हमें आपके साथ जॉइंटली ये होल्ड करने के लिए दिया है।
Thank you for your kind words, sir. Moving forward, I would like to introduce our eminent faculty again after the immense success of the union budget analysis. CA Sandeep sir is a chartered accountant and is enrolled as advocate at Bar Council of Maharashtra and Goa. Sandeep sir is an all India ranker in CA and the university gold medalist. He has rich experience of around 2 decades in the field of taxation and various corporate laws. Before founding DS Legal, Sandeep sir was the executive partner with Lakshmi Kumaran and Sridharan Attorneys, L&S, and was heading the Pune practice. Sandeep sir was also worked for 2 years in EY Pune. Being a litigator, Sandeep sir has successfully argued the matters before the High Court and Tax Tribunal, apart from the representing before various tax attorneys. Also, he was involved in various matters, successfully litigating before the Supreme Court. He has successfully argued the matters before the Arbitration and Labor Law Tribunal as well. Sir has in-depth understanding in the field of automobile, e-commerce, agri-chemical, engineering, IT, banking, and financial and pharma sectors, and has been involved in providing solutions on recent tax controversies impacting these sectors. He has expertise in providing hand-holding support to clients during complex tax investigations and litigations. Sir is a regular speaker at various forums like Institute of Chartered Accountants of India, CII, ASSOC, HAM, and Chamber of Commerce. Without further delay, I welcome everyone, all the students on this webinar. I request all the student participants to kindly write down their queries in the chat box. Thank you, sir. Over to you, sir.
Yeah. Good morning, all. Thank you, Shriram. Thank you, Sharadji, for the opening remarks. I hope I am audible clearly.
Yes, sir. Yes, sir. You are audible.
So today we'll be discussing very important topic, supply, and this is the beginning of GST. In fact, if someone really wants to understand GST, the starting point is to understand the supply. And once we are clear about supply, then probably we are clear about many other aspects. So today we'll deliberate on this very topic. I'll share my experience so far, understanding, reading this particular provision, and analyzing various scenarios for the clients. And you can keep writing your questions. We'll see if during the course of the session we have a time. We'll take up those questions. And in case we will not be able to take up during this in the middle of the session, we'll definitely have some 15 minutes in the last to take up some questions what you are having on this very issue. So before discussing about supply, let us first understand what are the basics of any tax law, and then probably we'll be able to deliberate more on what is the importance of this word supply. Now, what are the basics of any tax law? You talk about excise, you talk about service tax, you talk about GST, you talk about stamp duty law, you talk about income tax, tax law of India, tax law of any other country. If someone really has to understand tax law, what are the key things one should really understand? And these are some of the pillars in any tax law. And if we understand these basic foundation in any tax law, then it is like you have seen a puppet show, and what all the key threads, if you really pick up those key threads, then you will be able to navigate the puppet the way you want. So these 5 pillars are really the foundation of any tax law. 1, what is taxable event? Taxable event, if you talk about excise, the taxable event was manufacture. If you talk about income tax, the taxable event is if your income crosses a particular threshold. Once you really earn that income, what is the definition of income? What are the heads of income? If you talk about customs, the taxable event is either import of the goods or export of the goods. If you talk about stamp duty, the taxable event is executing a certain instrument. And when a particular transaction fits into the expression of instrument, then the taxable event will arise. Similarly, in GST law also, the taxable event is supply. And once we are clear about what is the coverage of supply, then the next issue comes is value. If we, for any tax law, so valuation is also a key. Like in income tax, we have five heads. How to calculate the gross total income, how to calculate the deductions, etc. Value. Once the value is clear, once we are clear about a value, and if there are valuation related issues are there, and there are judgments like BC Srinivas Shetty, etc. in income tax, they say that the levy is there, but valuation mechanism is not there, then the levy fails. So therefore, to tax a particular transaction, first, there should be a taxable event. Second, what is the value of that? Third, what is the rate? In customs, we have a classifications. In excise, we had a classification. In service tax, we had a different rates for different supply. If you talk about, say, GTA service, the tax rate was different than the normal services. So therefore, rate is basically classification. Once we are clear about a classification, then the rate scenario really comes into the picture. So therefore, we have to be clear. We have to be clear to tax a particular transaction. These are the very important that what is the rate. We will discuss. We will discuss in some other sessions about classification, but rate is very important. Today we will spend time on the first bullet, which is called taxable event. Next is who is liable to pay tax. In GST, you have seen sometime we are paying tax under forward charge, sometime we are paying tax under reverse charge. And there are scenarios like e-commerce operator, like they are neither the provider of the service nor the receiver of the service. So they are neither paying tax under the forward charge, they are nor paying tax under the reverse charge. So they are basically third party. And in the last is point of taxation. So I'm not saying point of taxation is the last, or it is the second, or it is the third. Basically, to make any levy effective, these 5 fundamental things are very, very important. So therefore, whenever you look at any tax law, and the GST gave us the opportunity for all of us to look at the new tax law, which was never existing. Income tax law was already in existence when we started as our profession. So we were reading a law which was already there. But the GST law is a law which came in front of us. And tomorrow you may be working in India, you may be working abroad. Tomorrow a new tax law will come, new taxation structure will come. Always look for these 5 questions. And once you get an answer of these 5 questions, I can tell you at least 60 to 70% you are there to at least understand the tax law. So these are the five fundamental things. And Supreme Court in many cases, and the very famous case in Govind Saran, Ganga Saran, Supreme Court clearly said that unless these 5 conditions are met, there cannot be tax on the particular transaction. So 1, what is a taxable event? 2, what value, what rate, who is liable, when he is liable. So these 5 things one has to look at very, very clearly and closely. Now we will go to the next point. What is the taxable event in GST? So the taxable event is supply. Supply include composite supply. The supply include mixed supply, transactions which are not supply. What is exempt supply? What is non-taxable supply? We will spend time in all of these things. Looks very simple, but very, very important. And when we start relating to our day-to-day life and questions, then it becomes very, very interesting. Now, what is supply? First of all, as I was mentioning, the taxable event, one should look at what is taxable event. Section 9 is a taxable event in CGST Act. Section 9 says that there shall be levied a tax called CGST on all intrastate supplies of goods or service or both, except supply of alcoholic liquor for human consumption at the rate not exceeding so and so, etc. It says that all intrastate supplies of goods. So therefore, Section 9 says the tax is on supply. What is supply? Supply is defined in Section 7. It has an inclusive definition. So therefore, whenever you see a definition, kindly look at very, very closely whether the definition is a inclusive definition, it is a means clause, or it is an inclusive clause. Whenever there is a mean clause, it means whatever is written there, the meaning can be confined only to that. But whenever there is something which is an inclusive clause, it means the coverage of that particular expression is very, very wide. It not only covers the natural meaning of that word, but it also covers so many other scenarios which are captured in the inclusive definition. So therefore, Section 7, once we talk about supply, it has an inclusive definition. It says that, I'm reading from the book, for the purposes of this act, the expression supply includes all form of supply of goods or service or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made for a consideration by a person in the course or furtherance of business. Now, each and every word, and whenever you read a taxable event, each and every word has a relevance. I have highlighted consciously. It covers all form of supply of goods or service. It is not only transaction in goods, it is a transaction in service. What can be the transaction? Such as, there is expression called such as. It means it is illustrative. We cannot say a particular transaction is not in the nature of sale, it is not in the nature of transfer, it is not in the nature of barter. Therefore, it is not covered. It is saying such as. So it is an illustrative thing. Once a particular expression is illustrative, it means the coverage is very wide, but it cannot be unlimited. Whenever an expression called such as, and then there are words, and then the principle of interpretation will come into the picture, which says that when there are these type of phrases which have been used, then we have to draw a common thread. The transaction should be having some fragrance of these kind of expressions which have been used. Only those transactions will be taxable. So it says such as. It can be in the nature of sale. One should know what is sale. Sale means where there is a transfer of property in goods. Transfer. It may not be a sale, but I am allowing someone to use it. I am giving other person to use it. Barter. It is like give and take. I give something and take something. In barter, there are two transactions. Normally, there is one transaction which is taxable, because if I sell goods to someone, he will pay me the money. Okay, and we will see what is the significance of money in GST. But if I give someone gold and he gives me a silver, there are two transactions happening. So there will be two taxes. One, when I give a gold to someone, that is taxable, there is one supply. Other is giving silver to me, that is next supply. We will discuss that. How barter and why these words have been used. And there is a purpose behind it, because for each and every word, there have been dispute in the pre-GST regime, whether these transactions are taxable or not. Supreme Court in 1958, in the case of Gann and Dunkerley, said barter is not taxable, because under the sales tax law, the tax is for a money value of the consideration. If something is a transaction which is not having money value of the consideration, it is basically consideration in kind. I give it to someone, someone give back to me. It is not the money value of the consideration. But that was not the position in service tax law. In service tax law, it was a tax on the consideration. Consideration can be in form of money. Consideration can be in form of a kind. And let us take an example. See, say the firm of, say, Baba Ramdev. They are Star TV approaches them that you come and do yoga in my studio. It means Star TV wants a service from, say, Baba Ramdev, that you come and do yoga in my studio. Then Baba Ramdev says that you don't give me money, you give me 5 minutes of air time. And in that 5 minutes of air time, we will put up the advertisement pertaining to the product dealt by the companies or firm or associated firms of, say, Baba Ramdev. So it means he's doing yoga. Instead of paying money to them, there is a free time, free air time has been given. And during that program of, say 1 hour, there may be a 5 minute air time which has been given. Now, that transaction is a barter. We simply understand barter in a normal sense, but in a corporate transaction, when we get into that, there are numerous ways the barter happens. Some of those barter transactions probably we don't understand in day-to-day basis. Simple example, I will give it to you. We deposit the money in a bank, but bank pays me interest. But in a sense, bank is also providing me a service by securing my money. Otherwise, if I put a money in a bank, bank is also providing me a security service. My money is safe. So therefore, there is some service which bank is also providing. It's very difficult sometimes to understand the financial transaction, that who is providing which service. Normally, we understand barter in a very different context. So therefore, the word barter is very, very important. Similarly, the words are like exchange, the words are like license, the words are like lease. All these transactions, some of the other scenarios were the subject matter of dispute before the court, and therefore that there should not be any challenge with respect to taxing these particular transactions. Specifically, these words have been put in. Let me tell you, my friends, it is a principle of interpretation. Lawmaker won't waste any word. Any word which is written in a law, there is some reason behind it. And that is a duty of a tax professional to understand what is the significance of this word. So we may end up concluding that this word has been added by way of abundant caution. Okay, without this word also, the purpose could have been served. But those are very rare interpretation. Those are not the normal interpretation. Normally, we have to try to give meaning to that particular word. We'll spend some time on goods. And very important thing is consideration. Okay, it should be for a consideration. So there are some transactions which are without consideration. Those are also taxable in certain scenarios. But otherwise, it should be for a consideration. And the last word is very, very important. In the course or furtherance of business. The transaction should be in the course or furtherance of business. If that transaction is not in the course or furtherance of business, that transaction is not taxable. So therefore, when we talk about supply, each and every word is very, very important. Why I highlighted in the course or furtherance of business, there is some example which I have put it a later part of my slides. We will understand that. Then the next is the definition also says that the transaction by a person with its member. So there have been a Supreme Court judgment in case of Calcutta Club. The question was, it is association of the members. It's like 20 people formed a group and they purchase something and they internally distribute it to each other for some consideration. Question was whether those transactions are taxable or not. Larger bench of the Supreme Court in case of Calcutta Club said there is no supply made by the club to its member because it is a principle of mutuality. That many people came together, they formed a club. Club is providing services only to the members and not to anyone outside the community. And the club may be buying the goods and selling only to the members. So it is basically for a principle of mutuality, those transactions should not be taxed. To overcome that, they have specifically added this particular thing also in the definition of supply. The question can come whether the lawmaker can nullify the impact of the Supreme Court judgment. Yes, the lawmaker can definitely nullify the impact of the Supreme Court judgment, but no law can go beyond the constitutional mandate. The constitutional mandate, it could be mandate is coming in a fundamental rights. The mandate is coming in the jurisdiction of a particular union cannot frame a law with respect to the area where the states has a power, or state cannot frame a law with respect to the area where the union has a power, only on those things. Or if there are any law which is violative of the fundamental rights, those laws can be challenged in the court of law. Otherwise, there are numerous scenarios where the courts have laid down some principle and the impact of that judgment has been nullified by the lawmaker by enacting a new set of provisions. So therefore, it should be for consideration. It should be in the course or furtherance of business. And if there are import of service transactions, so today we may not be discussing what is import of service, but import of service means if the service provider is located outside India and service receiver is located in India, that transaction is for a consideration whether or not in the course or furtherance of business. So therefore, to basically tax the transactions like Netflix, etc., that if I am using Netflix and Netflix is providing me the services in India, and I'm using Netflix in my home, whether those transactions are taxable or not. Basically, to tax those particular transactions, they have specifically said that at least for import of service, even if it is not for the course or furtherance of business, even those transactions will also be taxable. So therefore, there is definitely a specific reason behind introducing any or adding any particular expression and the word. We will discuss how to read the taxable event. Now I'll briefly touch upon the definition of goods. Very important. A lot of litigation has happened in past with respect to what is the coverage of goods, etc. Goods mean every kind of movable property. Now, what is movable property? It's a very, very wide. Whether the patent is a movable property or not, the Supreme Court said yes. A movable property can be in a form of a rights. Movable property can be in form of tangible. It can be in form of intangible. Movable property other than money. Money, it is basically excluded from the definition of goods and securities, but includes actionable claim, growing crop, grass and things attached to or forming part of the land which are agreed to be surveyed before supply or under a contract of supply. So therefore, the definition of goods is very, very important. Actionable claim, they have specifically added that. What is actionable claim? Lot many judgments, the courts have laid down lot many propositions, whether these scripts issued by the foreign trade policy, whether those are actionable claim, whether lottery is actionable claim. So therefore, the lot many jurisprudence which has basically laid down in that. Now they have specifically added the actionable claim in the value of the goods, which was not there when we compare this definition under the Sale of Goods Act. So therefore, whenever a particular clause has been specifically defined, then we have to see only that definition. If they say that the goods as defined in the Sale of Goods Act, therefore we have to go back to the Sale of Goods Act. What is defined as a goods, we have to take only that particular thing. So therefore, goods definition is very wide. What is property? Property itself is a very vast topic to understand. I get some rights. Rights is a property or not? When can you say it is a property? It should have the feature to transfer. It should have a feature to make a sale of it. It should have a feature that I can draw a consideration out of that. It should give me some privilege. Then only it can said to be property. So therefore, if we read, there is a huge jurisprudence on the expression property. And today you may be finding that this is a more of a theoretical discussion going on. But I can tell you, 2, 3 years, 4 years down the line, the way these transactions are coming, voucher related transactions are coming, lot many reward points transactions are coming, we may again have to come back to this definition to understand whether it is a movable property or not. You talk about reward points, you talk about loyalty points, you talk about vouchers. The test, whether it is a goods, whether it is a service, because the taxability will be basically impacting whether these vouchers, these rights are representing of goods or these rights are representative of service. The minute it is a goods and service, the tax rate will change. So therefore, this particular clause, we may have to come back again and again as and when those particular transactions are coming. So the way in this digital world, the way business is moving, I'm sure a lot many nitty-gritty we are going to face, and the lot many finer points we are going to come across in the future with respect to the goods and service. Now, the definition of service is even wider. It says service means anything other than goods, money and security, but includes activities relating to use of money or its conversion by cash from one form, currency or denomination to another form, currency or denomination for which separate consideration is charged. So let us leave the inclusive part. Even on the main part, anything which is other than goods, money and securities, that is a service. So therefore, if there are transactions happening between the parties, we will discuss. There are a few examples which I have added in the last, where the money is basically getting exchanged, and we come to the conclusion that this is not a transaction of goods. Next question will come, whether it will fit into the definition of service or not. Not that anything or everything. So it doesn't mean that for every transaction there is a tax, but it should be first to test whether these are the transaction in goods. Otherwise, it will come into the definition of service. There can be some transactions which are not even service also. We will discuss little later in our PPT. I have added those particular example on that. Now, what is money? Money means Indian legal tender or any foreign currency, check, promissory note, bill of exchange, letter of credit, etc., etc., or any other instrument recognized by RBI when used as a consideration to settle an obligation or exchange with the Indian legal tender of another denomination, but shall not include any currency that is held for numismatic value. Now the point is, why we are discussing about the definition of money. Now, because of these vouchers, which are having some face value, but are these recognized by RBI? Whether there is a backing of RBI. Otherwise, though, I will put 20 rupee, rupees 20 in my on a paper and give it to someone, and whether that is a money or not. Maybe this crypto things, okay, whether the crypto is a money or not. So these are the transactions, whether it is a transaction in money, whether it is a service, whether it is a goods, whether the cryptos are goods or whether the cryptos are money, whether the cryptos are shares, whether the cryptos are securities. These are the issues which we have to deal with. And these are the issues, not that I'm talking about future, I'm talking about today. And the way these transactions are happening, probably I will not be able to give answer of every questions, or I will not be able to clarify every concept. Probably the purpose of today is to at least show you a path that this is where the profession is likely to be. And this is how we have to look at things. Answers, you may have a better answer. Probably my answer may not be the perfect answer. But when you read, the fresh pair of eyes read these particular provision with the young blood like you may be able to come out a finer interpretation. Probably even I am not able to do that. So therefore, one has to definitely look at these very definitions very, very closely to understand the tax impact of it. Now there is a definition called consideration. Now consideration is also inclusive definition. Consideration means payment made or to be made, whether in money or otherwise, in respect of, in response to, or for inducement of supply of goods or service or both, whether by the recipient or by any other person, but shall not include subsidy given by the central government or the state government. Now the point here is, it can be, payment can be made by me, payment can be made by third party. Now, if I say to someone that kindly sell these goods to X for 100 rupees, X will pay 100 and I will pay 20 from my pocket for that very transaction. The 20, which is called third party consideration. So there is a phrase which is being used in the Western world, in Australia, in UK and some other countries, etc. Third party consideration. So any transaction which is having third party consideration, even that consideration will also be added in the value of the goods. Or in the value of the service. It should have a connection with the supply that you are making. If there is no connection with the supply, 1, 2, there should be a understanding that I'll be doing something for you and you give back something to me. It should have that sort of a nexus. There is a very famous judgment in UK. Is it a House of Lords or ECJ? I don't remember whether the House of Lords judgment or ECJ judgment. There is a fellow who is playing a piano on the road or guitar on the road, and someone comes and gives 10 pound or 20 pound or say 100 pound. The question was the money earned by that sort of guitarist or say the person who is performing on the road, whether that transaction will be taxable or not. The argument from the party was, I am playing on the road, there is no contract, there is no understanding of anybody who is crossing the road that they have to pay that money to me. I felt mesmerized with the kind of music what he was playing, and I given him 10 pound to him. But is it a service which he has provided to me? Or whether that money which I have paid to him, is it a consideration for that service? The court said no, there is no service, there is no reciprocal promises, there is no, he was not bound to perform for you, you are not bound to pay to him. Therefore, even if the money has been paid, the question is, are you really bound to pay for that? Or is he bound to perform for you? This is the test. And that test the court laid down, saying that if that sort of a transactions are happening, and that is why we are saying these donations are not taxable. Or if someone is doing something which you are not asking for it, and someone is paying some money which you are not asking for it, those transactions will not be liable to tax. We'll discuss. There is one more example which I added in the last part of my slide, whether those transactions can said to be will fit into the taxability of GST. And one more thing, but shall not include any subsidy given by the central government or a state government. If state government or central government gives any subsidy, but the question is, what is the meaning of subsidy? Whether that amount is being paid can said to be having a nexus with the supply that is being made. So therefore, whether this money is paid by the central government or by the state government, the person who is paying that money, whether he can be said to be a central government or a state government. I just gave you the example that I asked someone that you make a sale of the goods to someone at say of rupees 100 and 20 I'll pay. Assuming I am a central government, then 20 will not be taxable. But if I am not a central government or a state government, then 20 will be taxable. Now what the question? Now the question is, who can be said to be the central government? Who can said to be the state government? If the money is not paid by the central government or the state government, but money is paid by, say, municipality, Pune municipality is paying, or some other municipality is paying, or some other local authority is paying. Okay. So one has to really see each and every word, whether this is in the nature of subsidy. So there are numerous subsidies, subsidy called, say, drip irrigation subsidies. Okay. Who is paying that subsidy? Subsidy is paid to whom? Okay. Subsidy is whether that particular agency which is being paying the subsidy is a central government or a state government. What is the meaning of central government? Whether the central government is defined anywhere or not. If it is not defined, then where we can find the meaning of this word? Whether these words are defined in the Constitution of India, whether these words are defined in the General Clauses Act, where these words are basically defined, what is the coverage of these particular words? That is very, very important. So therefore, whenever we basically read these particular phrases, these questions should really come to us. Next is they say that monetary value of any act or forbearance. Even those forbearance means if I ask someone not to do a particular thing. So there is something called positive supply, there is something called negative supply. There are transactions like if I ask someone that I am paying you a money that you are not going to compete with me in the business, which is called non-compete fee. Okay, it means he is not doing anything, but I am asking him not to do. For asking him not to do, that is also a service, that is also a supply. Even those particular transactions, if there are money is being paid, but it will again not, it shall not include the subsidy given by the central government or by the state government. But if there is any deposit is being given, deposit will not be forming part of the consideration unless the supplier applies such deposit consideration for the said supply. So there are deposits which are refundable deposit, there are deposits which are non-refundable deposit. If deposits are non-refundable, definitely it's taxable. If the deposits are refundable, then till the time you apply that deposit for the supply, and that deposit will not be liable to tax. So therefore, these each and every word which I have mentioned to you, goods, service, and consideration are very, very relevant. Now we'll come to Schedule 1. Schedule 1, basically, we saw in the definition of supply, the last bullet, transaction without considerations are covered in Schedule 1. So it means there can still be some transactions which are without consideration. And the transactions which are without consideration, if they are covered in Schedule 1, only those transactions are taxable. If they are not covered in Schedule 1, then those transactions are not taxable. That is very, very important. So therefore, any free transaction is not taxable. Only those free transactions which are covered in Schedule 1 are taxable. So what are those transactions which are covered in Schedule 1? Permanent transfer or disposal of business asset, where input tax credit has been availed on such asset. If there are transactions like I have purchased a phone on which I have taken a credit, I gift it to someone else, that transaction will be liable to tax. Let's take example. I am a company into FMCG product and I am having 100 dealers. For all the 100 dealers, I want to give a laptop or a tab or whatever, or say iPad. I want to give them as a gift in some dealers event. So I purchase 100 laptops or say 100 iPads, and that 100 iPad I want to give them free. It says the permanent transfer or disposal of business asset where input tax credit has been availed on such asset. This phrase is basically very, very important. One, it should be permanent transfer. Two, it should be a business asset. If it is your private assets, no problem. If it is a business asset, when you have taken a credit on that. If you have not taken a credit on that, there is no problem. I purchased 100 iPad. I have not taken credit on that. I given free of cost to all my dealers. Absolutely no problem. There is no tax. But the minute I taken credit on any business assets, and if I make a permanent transfer of those particular transactions, then those particular transactions will be liable to tax. How to pay the tax? That is a different thing. What will be the value of that? There are valuation mechanism given under the rules or in the act or in section 15, etc. But it should be permanent transfer. It should be disposal of business asset. That is very important. Somebody asked me a question. Mainly these beverage companies like Pepsi, Coke and all, they give refrigerators to all their dealers. or they give lot many sales material or sales or say sales promotion material, or they give hoardings that the hoardings you can put it on your shop, etc. Now whether that can said to be a permanent transfer, because these are not the property of the dealers. Dealer may be using it as if it is owned by him. Dealer may be using the refrigerator as if it is owned by him. But these transactions are not the one where the title is basically transferred to them. So therefore, depending upon how your contract is basically structured, these transactions can be liable to tax or may not be liable to tax. So therefore, each and every word is very important here. Next is supply of goods or services or both between two related persons or between the distinct person as specified in section 25 when made in the course or furtherance of business. So therefore, if there is a supply between two related persons or distinct person, so GST is somewhat different from the scheme of what we had in service tax and what we had in sales tax. In sales tax, it should be one person to another person. In service tax, it should be from one person to another person. But in GST, your status in each state is different. So therefore, if there are supplies made by, say, from Maharashtra to your own unit in Gujarat, even those transactions are taxable. It could be supply of goods or it could be a supply of service. Obviously, when you are doing that transactions among yourself, there will not be any consideration. Even those transactions they have treated is a taxable supply. So therefore, even if there is no consideration to that effect, those transactions are liable to tax. What is distinct person? What all transactions will be covered? How to value that? Even in the related party, employee is also said to be a related party. So if there are transactions between employer and employee, we'll discuss in Schedule 3. They say that service provided by the employee to the employer is not taxable, is not fitting into the definition of supply. I'm repeating, employee to the employer, not employer to the employee. If employer provided some service or make some supply to the employer to the employee, those transactions are taxable. But they said they given some relaxation about 50,000 rupee. If there are any gift not exceeding 50,000 rupee by the employee, those transactions will not be taxed. But otherwise, employer to the employee or between the distinct person or between the related party, there is a definition of related party is also given in section 15. What do you mean by related party? There is a definition of distinct person as being given in section 25. So therefore, each and every phrase where it is written, we may be thinking that we are related, but is it really fitting into the definition of related person? We may be thinking, no, we are doing business as if we are stranger to each other, but we may still fit into the definition of related person. So one has to go through and see what is the coverage of this particular thing. Then the next is supply by the principal to the agent or by agent to the principal. So if there are agent principal type of relationship, obviously there the consideration may be 0. Similarly, import of service by a person from a related person or from any of his other establishment outside India in the course or furtherance of business. There are many free services being provided by the overseas subsidiaries or overseas holding company to the Indian subsidiaries, etc. These transactions will also be, even if there is no consideration to that, these transactions will be liable to tax. We have experienced so many scenarios which have really come up where the overseas holding company is basically providing services to the Indian subsidiaries. Those transactions will be liable, and many cases are basically coming. So one point I would just want to mention before I conclude about Schedule 1. There has been a press release which has been issued because employer-employee transactions are numerous. What all can said to be a supply of service by the employer to the employee. I'm just repeating, from the employer to the employee. Now, some employers, now even the basic question can come. If the employer is providing a table and chair for you to work, whether there is any service by the employer to the employee. Another scenario can come. Some employer is giving you a chauffeur-driven car, whether there is a service by the employer to the employee or not. Some employer is giving you the health insurance, or not only of you, but also of your family, whether there is any supply of service by the employer to the employee or not. So to some extent, this press release has clarified that if you are giving something to all your employee and it is already factored in the overall CTC of that company, those transactions cannot said to be a supply by the employer to the employee. But I'm telling you, this is the area where not many disputes have already come up, and we will see huge amount of disputes even days to come, because so far the tribunal has not been formed in GST, and once the tribunal starts functioning, probably we will be able to see so many scenarios which today are not in public domain, because these transactions may have happened with one company or say some group of companies, etc. But today these are not publicly quoted, and I also cannot mention that which company this issue has come up, etc. But these issues we will see more when the tribunal has come up and when all these orders gets reported. So therefore, to summarize, employer-employee transactions are also very, very important. Now come to Schedule 2. Just a minute. Now, with respect to Schedule 2, see, we discussed the definition of supply is cover both goods and service. The question is, what is goods? When can you say it's a transaction in goods? When can you say it's a transaction in service? So there are some borderline cases, and they have made it very clearly in the law itself that these transactions we will deem it as a sale of goods or say supply in goods. These transactions we will deem it as a supply of service. We'll discuss one by one. One is transfer of title in goods, including transfer of title in future date. We'll say that the law says this is a transaction in goods. Why we are discussing goods and service? Because the tax rates are different. The minute it is a goods, the tax rate is different. The minute it is service, the tax rate is very different. So therefore, one should know whether it's a goods or service or not. Goods forming part of the business are transferred other than the transaction in the case of sale of business as a going concern. Now, let me tell you, my friends, what do you mean by going concern? Is a big issue. When can you say is a going concern? When can you not say is a going concern? There are numerous judgments under the income tax law. There are numerous judgments under the sales tax law dealing this very aspect. So there are cases which say that if there are no creditors are not transferred, then it cannot be a going concern. There are cases I can choose which segment I want. Now, one client came to us. They say that there is a unit which is not in operation for last say 2 years. We want to sell that unit as such, along with the plant and machinery and there are some employees, etc. The law says it should be a running unit. If the unit has already stopped, that unit cannot said to be a going concern. So therefore, it's the business as a going concern. It means it is a moving thing. Something which is stopped cannot be a going concern. So therefore, going concern transactions are not taxable. But otherwise, if there are goods forming part of the business are transferred, those transactions are said to be transaction in goods. Another transaction is, and when a person ceases to be a taxable person. Today, if someone stops a business, okay, then whatever those particular transactions, those goods are there which are forming part of the asset of the business, will be deemed to be supplied by him. So therefore, whatever your closing stock is there, on the date of closure, you have to pay GST on that. That will be treated as if it is a supply of goods. So therefore, in GST, what they have done, they have basically mixed up what the law which was there in sales tax law, what was the mix up in service tax law, excise law, because a mix of everything. So they picked up all the best thing keeping revenue in mind, not keeping assessee in mind, because wherever they can extract more and more tax, and that is why our tax collection is basically increasing. And supply of goods by any unincorporated association or body of person to a member, we have already discussed even that transaction. Also, they said it is a transaction in goods. Then what are the transaction in services? Right to use the goods without title, transfer of title. Huge amount of disputes have happened. Huge amount of disputes in sales tax law, whether it is a right to use goods have been given or not. Okay, when can you say the right to use goods have been given? Huge amount of transactions, huge amount of dispute have happened. Even those transactions, they said we are deeming it as if it is a transaction in service. Job work. What do you mean by job work? This is also a kind of a big litigation area. When can you say job work looks like a service because they have said it is a service. But there are transactions like I give component A to someone and he does some processing on component A and adds B also. Now, after adding B, he sends back to me. Now, whether that is a service transaction or not. For that, there are judgments. He says that need not be service. Like a typical example is a bodybuilder. Now, what happened? These companies like say Tata Motors, Mahindra and all, they send the chassis to a bodybuilder. Bodybuilder builds a body on that. And then he sends back the chassis, the vehicle, which is fully body built. Now, whether activity of building a body, it is a transaction in service or it is a transaction in goods. Service means you are performing an activity on basically on something. Okay. Now it is not only you are performing one activity, you are adding huge amount of material on that. Now, whether those transactions can also be said to be service, the circular says otherwise. There are judgments. There are some advanced rulings. We say that these are the transaction in goods. So therefore, it depends what type of transaction is there, what type of value addition which are basically happening. That will depend whether it is a transaction in service or basically the transaction in goods. Then lease of immovable property, they say it is a service. Works contract pertaining to immovable property. Any transaction, any construction, renovation, modernization, erection, commissioning, which is creating immovable property. If it is not creating immovable property, then it will not be works contract transaction. Okay, for that, we will go back the overall intent, overall coverage. If it is creating only movable thing, then it will not fit into the definition of service. We have to see separately where it can really fit into that. So therefore, works contract transaction, what do you mean by immovable property? Is very, 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 very important. In Madras High Court, in one matter, said even windmill is not a immovable property. Okay. Supreme Court in case of solid waste and engineering said setting up a huge plant is not a immovable property. So what is the test given by the court with respect to immovable property? That is very, very important to fit a particular transaction to a things called works contract. Sale of under construction flat or property in respect of which completion certificate is yet to come, that is also treated as a service transaction. Temporary transfer of right to use IPRs, that is also treated as a service transaction. But when can you say it is a temporary? When can you say it's a permanent? There are rights in perpetuity. It means I got a right for a perpetuity, for a lifetime. Those transactions can said to be a temporary transfer, or those transactions can said to be a permanent transfer. Supply of food by way of or part of any service. So in like hotel and all, so it is a service transaction. But I'll give you one example. Someone asked us a question. Nowadays, because of this cloud kitchen and all, lot many semi-cooked food is being sold between the parties. So what generally they do, they don't cook the food fully. The food is cooked, say 80% or say 90% or up to a certain stage. And semi-cooked food is sold in bulk by one party to another party. Now, whether those transactions can also be said to be a service transaction, the answer is no, because that is not the way that expression has been used in Schedule 2. Okay, it should be more like a service. I am servicing a food to someone. But here, when these things are going in a bulk, those transactions cannot said to be a transaction in service to attract 5%. For that, we have to see what is the food, where it will get classified. It is a transaction in goods, and accordingly the tax has to be paid with that. Then agreeing to the obligation to refrain from an act, to tolerate an act, or to do an act. This is a big area of dispute and litigation, whether the liquidated damages. If I ask someone to do a certain activity at certain point of time, he is not able to do that. And for that, I am basically imposing some penalty on him. Or there can be non-compete transactions, or there can be transaction like some malls are having a contract with, say, the mall will sell only Coke product. They will not sell Pepsi product, or they will sell only Pepsi product, and they will not sell Coke's product. For that, some money is being paid, or some incentive is being paid. Those transactions will also be treated as a service transaction. Those transactions are also taxable transaction. It is basically, I am stopping someone that you should not do this particular thing, and for that I am paying. In a legal profession, this is very common that one person engage all the top lawyers and pay the fee and say that since you have taken my brief, you cannot take the brief from the other side. So I'm stopping someone to do a particular act, and for that some money is being paid. Agreeing to the obligation to refrain from an act or to tolerate an act. So there are scenarios where somebody is basically tolerating an act, like some construction is going on in my neighborhood. They came and gave me the money that no, this construction is going on. You have to basically bear with us, and for that we are paying you the money. It is basically tolerating an act or a situation. So even for those particular transactions, there will be taxability, and those transactions can said to be service transactions. Then I hope I am not moving fast. Anyone is giving some feedback? I hope I am not moving fast. Schedule 3, you can take up. Okay, now I'll ask my colleague Devang to deal with Schedule 3 scenario. Yes, Devang.
Thank you, sir. Schedule 3 list out the activities which are neither treated as goods nor services. Right. Before I move on to Schedule 3, as sir has in the preceding slides has talked about the scope of supply. Right. Scope of supply is broad. It includes all forms of supply, goods, services, and all. It includes activities which are mentioned in Schedule 1, which are without consideration. Now, Schedule 2, classification. But if you go to Section 7, it also talks about there are certain activities which are neither treated as goods nor supplied, and that those activities are now specified in Schedule 3. Now, first entry is service by an employee to the employer in the course or in relation to his employment. So services which are provided by an employee to the employer in the course of the employment are not taxable. Now, if we see the ambit, now what are those services? What are those services which are not taxable? If we talk about a lot of employer is providing a variety of services. Now, sir has rightly said in the preceding slides, what about gifts? Gifts are given to the employees, whether that can be considered as any service. Then second point that we need to see that the employer is also providing canteen services. Now, canteen services can said to be falling under the ambit of Schedule 1, or it will be falling under Schedule 3. So these are the questions which we need to see, because sir has rightly said in the preceding slides, the language they have used in Schedule 3 is services by an employee to the employer. It is not a case of services provided by an employer to the employee. So if employer is providing any services to the employee, can those services said to be falling under Schedule 3? So these are certain issues which are there, which department is raising in the current times. Now the second part is, what are the services which are provided by a court or tribunal? They have also been exempted under Schedule 3. Then there are functions which are performed by the members of the parliament, members of the state legislature, local authorities. Again, these services are again functions which are neither considered as goods nor services, because these are more in the nature of legislative domain. So they have kept those services outside the ambit of GST. Now, the duties which are performed by a chairperson or member or director in a body established by a central government or a state government or a local authority is also said to be outside the ambit of GST. So again, central government, panchayat authorities, state government authorities, these are in relation, have also been kept outside the ambit of GST. Now, another service is funeral services, crematorium. These are again also being kept outside the GST. Now, one last important aspect in Schedule 3, which we need to see is the actionable claim, which is, before I move on to actionable claim, there are also sale of land. Now, sale of land, when we talk about land, land is an immovable property. If we see the definition of goods, goods definition says that it includes any kind of movable property. It does not include immovable property. Now, land is considered to be an immovable property. So sale of land has been considered to be neither a good neither a service. But there is a subject to a clause 5 of paragraph 5 of Schedule 2, which says a sale of building. Now, again, this schedule sale of land is subject to a proviso clause, and that satisfaction is there, that the completion certificate that we need to see when sale of land is happening.
Just to add here, it says sale of land. It doesn't say sale of immovable property. Land, immovable property is a wider domain. Land is a one part of that. Earlier in service tax law, in the negative list, it was a immovable property, which was mentioned. Now it is mentioned land. So there are rights associated with land which are also treated as immovable property under the Transfer of Property Act, which is called Transfer of Developmental Rights, TDRs and all. Those are also treated as an immovable property, and once those were immovable property, those transactions were not taxable earlier. But now it says sale of land. And that is why again and again I am re-emphasizing this very point to all my friends, that we have to give due importance to the word which is being used. Land is subset of immovable property. All immovable properties are not land. Land is an immovable property, but all immovable properties are not land. So what is covered in Schedule 3 is sale of land. So therefore, if there are transactions which are other than sale of land, even if pertaining to immovable property, those transactions will be liable to tax. Sorry.
Then the another aspect is with respect to the actionable claim, other than lottery, betting, and gambling. Now, this actionable claim, as said, this has a lot of potential dispute that can be dispute in the future. Now, what is the actionable claim? That question is there. Now, this actionable claim, because the definition of goods includes actionable claim. Now, GST Act says that actionable claim, you refer the definition of Transfer of Property Act, Section 3. Now, Section 3 of the Transfer of Property Act, actionable claim, basically you have a claim in an immovable property, that property which is not in your possession. So, this definition, CGST Act has referred to the Transfer of Property Act. Now, question which is going on right now, whether this online game which is going on, whether it is in the nature of actionable claim or not, whether it is goods or not, so is it in the nature of goods or service or not, whether it falls in the Schedule 3. So this online gaming is going on because it's a skill of game. It's a master of skills. The industry is contending that it's in the nature of
Game of chance.
Game of chance.
So it is a dispute between whether it is rummy and poker, whether it is a game of chance or it is a game of skill. Okay, so those disputes are basically going on. Whether it is a game
enjoyment is happening. Enjoy karo. Full enjoy karo. Good morning. Yes, sorry.
Mr. Vaibhav Modi, can you mute? Sorry. Now the point is whether it is a game of chance or game of skill. So that dispute is going on. Huge issue. Amounts involved are in 1,000 crores. And because of this COVID-19, not many online gaming has really come up, and the matters are being argued in the court. So far, in some other context, Bombay High Court and some other High Court said that in case of Kuldeep Singh and others, they said that this is a game of skill. This poker and all, they said that it is a game of skill. It is not a game of chance. And once it is not a game of chance, but a game of skill, then it is not a lottery. Lottery cannot be a game of skill. Lottery has to be always a game of chance. So that is a distinction between lottery and non-lottery. The minute it is a lottery, then there are different issues, because lottery is excluded from Schedule 3. If it is excluded from Schedule 3, it is covered in actionable claim. Actionable claim is covered in the definition of goods. What is excluded from the goods is actionable claim, which are other than lottery. Okay. So therefore, that is what is the issue in this. Sorry.
So actionable claim are basically, as we discussed, that neither goods, but however, which are in the nature of lottery, betting, and gambling. This thing, GST, that is outside the scope of Schedule 3. Now, moving on to the next activity, which is supply of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into India. Now, this is an example of IC sale. Now, goods have not touched the Indian borders, custom borders, and before reaching the borders, they have been sold out to the third party. So that transaction they have not reached the custom borders. So that transaction have taken outside India. And this act is not at all applicable to those transactions which are happening outside India. So these transactions have been kept outside the ambit of GST. Now,
just to tell here, earlier these transactions were not covered in Schedule 3, but these transactions were reported in India. You take example of, say, company like say Thermax. Now they are doing some project in, say, Middle East. For doing a project, they need some machinery. The machinery will come from, say, Germany. It is a purchase from Germany and shipped directly to Middle East, installed there. but it is reported as purchase in my books here. But goods are not imported in India. Goods, supply of goods from a place of non-taxable territory from Germany to another place which is in a non-taxable territory, say in the Middle East, without such goods entering into India. But I have reported in my books as a purchase, and I will also be reporting in my books as a sale. But it is a third party, third country transactions. Those transactions, tomorrow somebody should not say and you pay tax, etc. They are specifically excluded.
Now moving on to the next activity, supply of warehouse goods to any person before clearance for home consumption. Now you have imported goods, you have kept those goods in the warehouse, and you have not imported into India, you have kept in the warehouse and you have filed in-house bill of entry, in-house warehouse bill of entry. Now question is whether, and then that warehouse goods have been further sold out to a party. Then question is whether that transaction can be considered as a sale which attract GST, but as the Schedule 3 has said that any supply of warehouse goods to any person before clearance for home consumption. So ultimately, duty, if you see the import BCD is attracted only when goods are imported into India, right? So if goods have not been imported into India and it have been stored in the warehouse area, the public or private bonded warehouse, and these goods have been sold out from the warehouse itself, then the Schedule 3 says that those activities will not be considered as goods or services, and they will consequently they will be outside the ambit of GST. The
last one.
The last one, the supply of goods by the consignee to any other person by the endorsement of documents of title to the goods after the goods have been dispatched from the port of origin located outside India, but before
This is IC sale.
This is again example of IC sale. More or less, it is interlinked to what we have discussed to supply of goods from a place in the non-taxable territory to another place in the non-taxable territory. But this is with the transfer of title, endorsement of transfer of title. So they are also covering those activities also outside the ambit of GST.
Thank you. So now, Devan, with respect to Schedule 3, we now understood. Now we'll get into the next point. What is exempt supply? Exempt supply is a supply of goods or service which attract nil rate of tax. So one has to see the rate chart, notification number 1 for goods, or I think it is 10 for services, or which may be wholly exempt from tax under Section 11. So there are some transactions which are exempted under Section 11 or Section 6 of the IGST Act, including non-taxable supplies. So there are supplies which are non-taxable. There are supplies which are taxable but exempted. But exempt definition covers both. It covers taxable, but rate is 0. Taxable, but specifically exempted by way of notification. Third, non-taxable, like liquor and all. Okay, so those transactions are non-taxable transactions. Those are also also exempt supplies. What is non-taxable supply? Supply of goods or service which are not liable to tax. So there are transactions with respect to liquor. There are transactions with respect to like HSDs and all. Okay, diesel and this thing. So those transactions are non-taxable transactions. Yes, this is an important slide. Now we spent significant time on so far discussing what is supply, what are the issues. First and prime most important thing is principle of interpretation of taxable event. This is a settled position in law that taxable event has to be strictly construed. So you have to strictly construe that. These taxable provisions, taxable event provision cannot be read widely. These have to be read in a very strict sense. It cannot be like in a very wider manner, we will tax anybody and everybody. We have to give a strict interpretation it should squarely fit into that. And if it is not fitting into that, those transactions are not taxable. So therefore, whenever you are reading taxable event, you read those particular things very, very strict manner, because the basic threshold has to be crossed for those transactions to tax. Now we discussed about employer to employee. I think there is some typo error. It has to be employer to employee. It cannot be employer to employer. It has to be employer to employee. Now, assuming someone is working in a jewelry shop and he does a work in a month, and that the jeweler says that I will give you a coin of gold every month, whether that transaction is taxable. So what is exempted is supply by the employee to the employer. Now employer is giving him a gold coin. Definitely that transaction is taxable. Now somebody assuming is working in Tata Motor, and Tata Motor say that you have worked for me in a month, you drive down one car every month. So therefore, whether that transaction is not taxable, definitely taxable. So it is a supply by the employer to the employee, that transaction is taxable. Next question has come, is providing food and transportation facility with or without consideration. So we have discussed about the press release. If you are giving some food or transportation to all your employee without any charge, those transactions they said is not taxable. But otherwise, there are series of advanced rulings on this very topic. They said that it is not a business of the employer to sell the food and provide the transportation. Therefore, those transactions should not be taxed. I have also argued a couple of matters like this, but what exactly the court is going to take a call on this particular thing? Definitely, two views are possible on these basically the transactions are. I have asked this question: providing table, chair, and air conditioning facility to work, whether this is a supply? Certainly not, because these are the basic thing for employee to provide a service. Unless I give this, how can he work for me? So in a contract, there are some conditions which I need to fulfill. There are some conditions which he needs to fulfill. So therefore, providing this basic thing by the employer to the employee, because there are numerous questions came when they say that food is not taxable. The question came, we give morning tea to the employee, whether we should be paying tax on that. Okay. There are companies, they give evening snacks also, whether those transactions are taxable. No, certainly not. ESOP to the employee. This is a big issue. And there are numerous transactions with that. I hope you all understand ESOP is basically employee stock option plan. Employee has been given the shareholding of the company. Now, there is a difference between creating the right or selling the right. Creating the security or selling the security. When a fresh shares have been issued by the company, it is basically creating the capital. And when company buys the share from somebody and sell the share, that is a transaction in the securities. So therefore, ESOP given by the company to the employee is not taxable. But there can be a scenario, assuming somebody is, say, working in some subsidiary of Tata Motors, but ESOP is not given of that subsidiary, ESOP is given of, say, Tata Motors. In that case, that company will buy shares of Tata Motors and then give it to the employee. So it means they are buying shares of Tata Motor and providing those shares free of cost to the employee. It means that transaction is in the security. Depending upon the taxability, the transaction in securities are not taxed, but depending upon the taxability, those transactions will be taxed. Otherwise, those transactions will not be taxed. There are numerous advanced rulings with respect to employee recovery, saying taxable, non-taxable. Recently, some ruling has come of Karnataka authorities saying recovery by the employer to the employee is taxable, but there are numerous rulings of Maharashtra, which I only argued many of them, saying those transactions are not taxable. Then TDR, we discussed what is immovable property, but what is excluded in Schedule 3 is a land, not immovable property. So therefore, there is a transfer of TDR those transactions are liable to tax. Sale of leasehold rights pertaining to the residential property by one family member to another. So one chartered accountant asked me this question many months back. So they were having some leasehold house, and this house was used by two brothers, and the value of that leasehold rights is very, very high, in many crores. And after some point of time, one brother says that I want to move out, therefore I am selling off this particular leasehold rights and giving it to you. The question was whether that transaction is taxable or not. I initially thought leasehold rights, transfer of leasehold rights is taxable, therefore it should attract tax. But when I read the definition of supply once again, it says in the course or furtherance of business. So therefore, even if it is a sale of or it is a transfer of leasehold rights, but is it in the course or furtherance of business? Answer was no. It was not in the course or furtherance of business. Therefore, those transactions will not be liable to tax. Free supply, buy one, get one free. There are numerous sales schemes, etc. Whether those transactions are taxable, nothing is free. It is basically I am paying the price of two. If I buy one, get one free, I am paying the price of two. So nothing is free. So therefore, those transactions, one cannot say these are free. These are basically bundled. Now, cross charge, we have discussed about when there is a intercompany transactions between, say, company, say for that example, Tata Motors, they are having factory in Pune, or they are having, say, plant in, say, Gujarat. The transaction between Pune and Gujarat, whether those transactions are taxable or not. The cross charge is definitely taxable. How to value the cross charge, that is a big issue. Whether the salary of employee needs to be added or not, again a controversy going on. What about shareholder related expenses? Because there are many expenses which are pertaining to the shareholder, whether everything is to be cross charged or something less is to be cross charged. So valuation with respect to cross charge is a big issue so far as the supply is concerned. Positive supply versus negative supply, I have already discussed with you. When you perform certain thing for someone, this is called positive supply. When you ask someone not to do, I am paying someone not to do, those transactions are called negative supply. Those transactions are also taxable in certain scenario, but not taxable in many scenario. Job work, we have already discussed that. What do you mean by job work? When can you say it is a job work? When can you say it's a transaction in goods? This is the ECJ judgment which I discussed about that guitarist. I was confused whether it's House of Lords or say ECJ. It is a ECJ judgment in case of RJ Tolsuma, where they said that there has to be payment of consideration against a commitment. If there is no commitment, if there are no reciprocal promises, those transactions cannot be taxed. In Maharashtra, you must have seen many of your client may be taking state incentives, which is called package scheme of incentives, etc. Whether those transactions are liable to tax. The state incentive is being basically paid. There is a judgment of New Zealand Supreme Court. That judgment says that if a state is paying a money for you to set up a unit or to have a unit, it is basically for existence of that unit. You are not providing service to a state by setting up a unit. You are doing your own work. So therefore, that very transaction cannot be liable to tax. So therefore, if any state government is paying some incentive for setting up a unit, but in any case, our definition says subsidy given by the state cannot be taxed. But whether it is a subsidy or not, because there is a difference between incentive and subsidy. So therefore, even if someone say it is not a subsidy, but it is an incentive, but there is no reciprocal promises for you with this regard. Therefore, these transactions cannot be taxed. Then works contract in case of transaction in movable goods that we have discussed, is again depending upon what is the intent of the parties, what is the overall coverage of the particular contract. Going concern we have discussed, and coverage of actionable claim, I think Devang has clarified that the game of chance and or the game of skill. Okay. So I think this particular thing we have already discussed. Now we'll come to the next topic. I think we have another 12-15 minutes before we take up your questions. Now, composite supply and mixed supply is a big issue. We will read the definition together. Composite supply as a supply made by a taxable person to a recipient consisting of two or more taxable supply of goods or service or both, or any combination, which are naturally bundled and supplied in conjunction with each other in the ordinary course of business, and one of which is a principal supply. It should be two or more taxable supply. Supply should be made by a taxable person. It means one person is providing two taxable supplies which are naturally bundled and supplied in conjunction with each other in the ordinary course of business. Then only it will be said to be a composite supply. What are those examples? Now, each and every word which I just now mentioned is very important. It's by a taxable person to a recipient, naturally bundled in conjunction with each other in the ordinary course of business, and one of which is a principal supply, shall be treated as a supply of such principal supply, and the tax rate will be applicable as in the case of principal supply. Now, what are those? Before we come to the issue in composite supply, let us see what is mixed supply. Mixed supply is two or more individual supplies of goods or service or any combination thereof made in conjunction with each other by a taxable person for a single price. Kindly note, when we are reading about composite supply, they didn't say single for a single price. Here it is saying single price. So therefore, to fit into composite supply, the price need not be single. But to fit into mixed supply, the price has to be single. If there are not single supplies, then it cannot be mixed supply. For a single price, where such supply does not constitute as a composite supply. So therefore, it should not be a composite supply. And if it is a composite supply, then it cannot be a mixed supply. Now, what are the tests? What are the tests given by the court? Let us see that. When can you say it's a composite supply? When can you say it's a mixed supply? So there is an education guide in service tax. They have basically laid down certain principle because their similar concept was there. It says the perception of the consumer. If the large number of consumers reasonably expect to receive and service together as a package, then such package should be treated as a naturally bundled. Like we take a flight. The baggage handling service is integral to the air travel. Even catering, nowadays catering is not integral in a way that in some flights there are food, some flights there are no foods, etc. Or you can buy food if you want. Those are not integral. But if a large number of consumers reasonably expect you to receive such service together as a package, then it will be treated as a naturally bundled. So if I buy a phone, along with the phone, there will be charger, there will be charging wire, there may be some headphones, etc. Those can be said to be naturally bundled. But things are really changing. Now Apple is giving a very different type of adapters are not given. So things are changing. So therefore, what is the perception of the consumer? How the trend is? Let's take example that at one point of time, when you are going to buy a house, it was a bare shell. Then things changed. People started giving you a modular kitchen. Then things further changed. People started giving you this wooden flooring in, say, master bedrooms, etc. So these are the bare minimum expectation what people are having. So it is a perception of the consumer, and perception market sets the trend. Okay. But if tomorrow some builder wants to give a, say, car also, that you book a flat, I'll give you Honda City. That cannot be the perception, because that is not the norm in the market. What is norm in the market? What market really understand that? That will be the thing which will test whether it is a composite supply or not. Supplied as a package by the majority of the supplier. Majority of the supplier are basically dealing with and basically providing that particular thing. Like we go in a hotel, generally the breakfast is included in the package. So therefore it is naturally bundled. We cannot say food is separate, okay, or my hotel stay is separate. So something what is really majority of the suppliers are giving. But if something is not given by majority of the supplier and you are giving on your own, then that will depend on how can you say is naturally bundled. Nature of the service in a bundle is also very, very important. It should be incidental to that. Okay. It should have a nexus to help the better enjoyment of the main service. Okay. It should be incidental to that particular thing. Like we take a taxi service. They along with the taxi, they give sometime the water also. There are some water bottles. Okay. We go during the travel, they give sometime the food. Okay. They give sometime the newspapers. So depending upon that, so the test is how market is basically perceiving this and how majority of the suppliers are dealing with. So it is basically the supplier and the buyer. They set what is mean by a naturally bundling. Now, there are some important foreign rulings which are very, very important. We can quickly run through that. In a card protection plan, there is a European Court of Justice judgment, a very important judgment, laid down certain principle. When can you say is a composite supply? When can you say is not a composite supply? So there was some agency which was giving some card protection services. Some of the services were like, if your card is lost, then we will compensate you. Or if somebody misuse your card, then to certain extent we will hedge your risk, etc. And then there are certain incidental service of maintaining your database, etc., etc. The question before the court was whether everything is insurance or something is insurance and something is not insurance. And insurance supply was not taxable. So insurance supply was basically exempt supply, whether everything fits into that. And for that, the test what they have laid down is this. Each supply of service must normally be regarded as a distinct and independent. This is very important. So by default, composite supply, mixed supply, we should not think. The default principle is each supply is independent supply. That is a by default principle. Second, a supply which comprises a single service from economic point of view should not be artificially split. The essential feature of the transaction must be ascertained to decide if there are typical customer comprise several distinct principal service or a single service. So if from an economic point of view, it is a one transaction, you cannot artificially split it. Then there is a single supply in a case where one or more elements are regarded as ancillary service. So if there are ancillary and principal, an ancillary service is defined as something which does not constitute for consumer an aim in itself. Whether you are traveling in a, assuming in a food is given in the aircraft. Are you traveling for the food, or food is incidental to, or food is incidental for that? So that is a test. What is predominant and what is incidental? The fact that single price is charged is not decisive. If the circumstances indicate that the customer intended to purchase two or more distinct service at a single price will not prevent these being treated as a separate supply from a different liabilities applying if appropriate. So therefore, what the test laid down is by default each supply is independent. It should not be artificially split, and it should not be the aim of the customer. So similarly, there are other rulings of the courts with respect to somebody was going and watching a match, and there was some T-shirt is being given, whether the T-shirt is a separate supply or not. They said no. It was held the service would be regarded as incidental to the principal supply, because nobody will be going only to get a T-shirt. Okay. So therefore, similarly in British Telecom, somebody purchased the vehicle and some transportation service is being provided for transporting the vehicle from location A to location B. Whether both are single supply or both are two separate supplies, the court read down the terms of the contract and said that delivery to a place was critical to complete a particular supply, and therefore transportation was forming part of the supplies. In India also, many disputes with respect to transportation. In excise, whether the transportation is going to be a part of the value of the goods on which excise duty was to be paid. The similar issues are there in GST. But if the tax rates are common, other side is in position to take credit, generally we have not questioned that. But let us take an example that if vehicle which is attracting tax at the rate of 43%, because 28% is GST, 15% is this compensation cess, and then on that there are this particular thing, what you call transportation. Okay. Now whether that transportation will be taxable at the same rate or not. So in that they said it is single supply. So similarly, there are other foreign rulings. I will not take your time. In fact, I wanted to discuss, probably we took a little more time. In India also, these concepts have been used. The law laid down in the foreign rulings have been applied by the Indian courts as well. So very few Indian rulings are there on this subject. Otherwise, there are many advanced rulings are there on this very issue, but not very consistent Indian stand so far. So this area is yet to come up. So just to give you a few examples, in the last, sale of goods along with the transportation, is it a composite supply? Yes. Sale of goods, sale of food along with the delivery, we can say it is a composite supply, because this is the norm as of today, home delivery, etc. You buy a camera or laptop with a cover or bag. Okay, you stay in a hotel along with the breakfast. This is a composite supply. House with modular kitchen or house with car, we have discussed that particular thing. Now somebody asked me a very interesting question, that I am selling 10 kg atta, and along with that I want to give half a kg besan free, or I want to make it as a combo. The tax rate on atta and besan was different. The question was, can I make it as a composite supply? Then I asked him, why you want to make it? He says that I want to launch besan, so therefore I want to give besan as a free, but tax rate in besan was very high compared to the atta. So therefore, is it naturally bundled? ऐसा कभी देखा है हमने कि 10 kg आटा के साथ मेरे को half a kg बेसन मिल रहा हो, etc. So we said no, it cannot be composite supply, because to fit into composite supply, it should be naturally bundled. It cannot be like my value of atta is more and my value of besan is less. So therefore, it should be a composite supply. Similarly, coffee with coffee maker, can you say it is a composite supply? Whether generally we buy coffee, most of the coffee purchase is only coffee, not with the coffee maker. Similarly, in the solar industry also, many issues, whether this solar module panel, along with fitting, erection, commissioning, installation, there are numerous rulings on this very issue, where SSC wanted to take the benefit of composite supply, but advanced ruling authority in most of the cases has not given that benefit. Then combo pack in FMCG, there is a pack of chocolate, I give cold drink free, or something of that, whether that is a composite supply or not. Sometimes we are driven by the values. That value of chocolates is higher and value of the cold drink is less. So therefore, very, very complicated issues, very difficult issues. But given the fact that tax rate on cold drink is 43%, on tax rate on chocolate maybe I think 18% or so. So therefore, if you are combining it and making it as one, which is, if it is not composite, then it will be mixed. If it is mixed, then highest rate will apply. Supply by 2% cannot be fused. I give A, other give B. I cannot make it as a composite supply. Okay, so it has to be one single person. And supply to 2% cannot be treated as a single supply. So if I give X to A and Y to B, I cannot say it is a single supply. So therefore, these are finer nitty-gritty in a contract. I must say that composite supply and mixed supply is going to have many issues in days to come. I think we can take a few questions. You want to come?
Sir, good morning, sir. Good morning.
Yeah, good morning.
Just yesterday only I had one incident. Yesterday only I had an incident.
Yes.
I have purchased one hard copy book,
Uh-huh.
and the author offered me soft e-copy free of cost.
Uh-huh.
Being he is my friend, I asked, "You have not charged me GST?" He said, "No, books are exempt under GST."
Okay.
So I told him, dear, it is correct, but it is a mixed supply. You are giving e-copy of that book free of cost to me. It became a mixed supply. And e-copy of the book is chargeable at 5%.
Very interesting. Very interesting.
He then cross-checked it with his team. See why we did this. The logic behind structuring this topic to student is this only, sir. I observed many students don't know whether interest is an exempt supply or it is a non-GST supply. Whether to consider this for calculation of 42, 43 or not.
I think it is specifically excluded for the calculation purposes.
No, I understood, sir. That is different. But whether it is an exempt supply or non-GST supply. So, difference between exempt supply, non-GST supply, a composite supply and mixed supply is very, very important to understand in your articleship with respect to your exams.
Oh, very good.
Those students who attended, I think will get benefited a lot.
See, Rajesh bhai, at this point of time, we can only show we can only show that show a path to the student. Obviously, it is they who have to explore themselves when they move forward. We can only show path. This is how the law has to be read. These are some of those experiences which we got, and therefore, if you follow, probably that what you are going to enjoy is going to be very, very different. Yes, I think we can take up some questions.
Yes, sir. Participants are requested to send the questions in the chat pod. I can read them on your behalf. As of now, sir, few questions were there. I guess you covered it while your session, right, sir? The last question: the purchase made by registered person from unregistered person is exempt supply. from
Purchase made by, so far they have not
registered.
notified. So far they have not notified. Initially they notified and then they have withdrawn that notification. So therefore there is no reverse charge on these particular transactions. So if there are purchases made by a registered person from one registered person, it is not exempt supply, because supply is being made by the person who has not taken the GST registration, and since his threshold is not yet crossed, therefore there is a that particular transactions are not taxable because of that. I think there is some problem in my camera. Probably somebody has said that we are not able to see me.
Yes, sir. If
something
you
has
are
happened.
audible, sir. You are audible, sir. However, there was a purple mark behind, and now the video is paused, sir.
Yeah, I think there is some challenge. I don't know. Maybe
No,
I need.
so you can try to rejoin if possible. Otherwise, we can continue. No issues, sir.
I think
You're
we can.
audible. You're clearly audible.
I
You're
think we
clearly
can.
audible, sir.
I think we can continue, because if I
Okay, sir.
rejoin,
No issues.
yeah.
No
Sir, you are
issues.
audible,
And
no
there is one more participant. He's raising his hand. I request to please mention his problem, sir. Like he have some query. Yes, Zambia, please. Are you able to unmute yourself?
I think she has wrongly raised hand.
Okay.
Okay.
Okay. Anyone else? Anyone else have any queries?
I would like to ask one query, sir. This
No
is
list.
Vaibhav Modi, Cambridge Insurance.
Yes.
So as you said, that transferable TDR is taxable,
Uh-huh.
but there are various. It's actually ambiguity topic. There are judgment which says okay, anything arising out of the land is to be treated as a land only. Can we do that and take the benefit of those judgment and take the case forward for that?
मुश्किल है GST में. Okay. Because very tricky. Because there is already one Bombay High Court judgment which is against us on this very point.
Sir,
Okay.
just I want to add, land and any benefit arising out of land is a judgment for stamp duty purpose. And the judgment which is given for one act, we cannot follow as it is in any other law.
Rajesh bhai, I will put it differently. We can use that judgment, but if the phrase used in that act and the act which we are interpreting are perimeteria, then we can
Understood.
then definitely we can use that. But if that phrase is different and this phrase is different, then that judgment cannot be used, because definitely the rights pertaining to land are immovable property. But whether the rights pertaining to land are land, that is a question. Immovability है, इसमें कोई doubt नहीं है. But वो stamp duty purpose के लिए the minute say immovable, it is done. But we are not confined up to immovability state. We have to go to the next level. I think some people asked question.
Yes, I would like to read it.
Modi ji, आपका question, I hope I could answer.
Yes.
So there are a few questions in the chat. I would read out to you. Saurav Roy have a question relating to exempt supply. Sir, in case of a transporter where my service were exempt from supply of service and there was no requirements for registering under the GST, but since I am permanently disposing all my trucks for which the consideration exceeds 40 lakh, as discussed, we have to take registration because of the business definition that is covered under clause 217.
Correct.
Of CGST Act. But however, as per section 7.1 clause C of CGST Act, there was permanent disposal of business assets on which ITC have been availed. Then there is a liability. As I did not avail ITC on purchase, still I would be liable to pay GST on sale of the registered and get registered.
See, permanent disposal वाले जो transactions थे, where consideration is not there. Now the question is, are you giving your trucks on free? If you're giving your trucks free, then we can take a view that you may not be liable to take GST registration. But if you are scrapping those and you are going to get money for that, then this is not a transaction which is covered in Schedule 1. So Schedule 1 transactions are those where there is no consideration. But if there is a consideration, then that transaction on their own merit is taxable. Shall we go to the next one?
Yeah. Yes, sir. Yes, sir.
One query.
Lakshak Kapoor, sir, one query regarding composite supply, whether renting services provided by a coaching institute, when there are separate invoices issued, supposedly 500 per day. So it should be 18% as composite or 12% as hostel accommodation. We have to understand. We have to understand the transaction as a whole. Assuming somebody is preparing for IIT coachings, etc. Okay. Generally, most of these coaching centers, they don't provide hostel. But if you go to Kota, they have hostels also. So we have to see the overall conduct. I cannot say everything is 18%, or I cannot say 18% on one, but 12% on something else. But going by the law laid down by ECJ, that each supply is an independent supply. And if we are able to establish that the parties, how they have contracted, and it is optional, that not that everybody, so there are transactions ki aapko hostel lena hi padega. So there are transactions ki when we say that hostel is optional, if 200 students are coming, only 20 are opting for the hostel, then we can say these are some independent transactions, and accordingly the tax rate will be separate. So one has to see the contract, one has to see the overall conduct of the business, how we can justify that. If an entity gives gold coin to the customer occasionally for sale promotion, will it disposal of the business asset without consideration? Bilkul aapko reverse karna chahiye. And ask that entity to make me also their customer. Rajesh bhai.
Yes, sir.
अगर वो ऐसी एंटिटी का कस्टमर बनने में गोल्ड कॉइन फ्री मिलता है, तो we'll be happy becoming that customer.
True.
ITC रिवर्स करना पड़ेगा.
Anyone else? We have already exhausted with the time.
Sir,
Yes,
I just
yes,
want
sir.
to add in the case of transporter business, which raised by Saurabh. If the turnover is exceeding 20 lakhs in case of transporter business, please check whether there are some other receipts like sale of scrap, sale of used tires, even a single rupee sale, which is not an exempt supply, made you registered with GST, liable for registration with GST. तो मतलब मैं हटके बात कर रहा हूँ, क्वेश्चन का जो क्वेश्चन रेज किया है उसका हटके. Many times we think कि there is a exempt supply and no need to take registration, but being the turnover is exceeding 20 lakhs, we should check that also. Right, sir? Sandeep
Yeah,
sir, means
definitely. No, definitely.
I guess there are no more questions from the students' end. Rajesh sir, I would like to, I request CA Rajesh Agrawal sir, the newly appointed chairman of Pune ICI, to present his closing remarks for the session.
It is.
Thank you,
Rajesh.
Sairam. Thanks to Sandeep Sachdeva sir for elaborating on, us on supply terms, mixed supply, composite supply, exempt supply, which is very, very, very useful and used in many sections. Thank you for your valuable time, sir, and deliverables to our audience. Thanks to all branches who joined to this series. And more or less, very important, I should thanks to all the participants who patiently listening and participating in large number. Thanks a lot. Thanks, Sriram. Thanks,
So,
Vaibhav.
yes, I would even request CA Vaibhav Modi sir, the chairman of Pimpri Chinchwad Vikasa, to present his closing remarks for the session.
Yeah. Good morning, all. Thank you. Is such a prayer that cannot be seen or touched. It must be felt by heart. And I feel honored and privileged to get the opportunity to propose vote of thanks on this special occasion of GST series. I would like to thank CA Sandeep Sachdeva ji, who blessed us with his presence and knowledge on the series, GST series. I'm also very much thankful to all the branches committee members who have came forward to join hands to take such wonderful series on GST, which is much required in today's time for everyone. Even we learn new thing every time. Words are not enough to thank their constant efforts and support to shape this GST series. I, CA Vaibhav Modi, on behalf of Pimpri Chinchwad Vikasa Chairman, to convey deep regards and hearty thanks. I am also thankful to Rajesh Bhai, Chairman Pune branch, for giving me opportunity. Finally, my gratitude to all the students who has joined this seminar for in the early morning, and we can see your thirst for the knowledge. I know you guys will definitely succeed. I will ask you to join other 2 days remaining also, and take the benefits for which Rajesh Bhai has taken and Pune branch has taken huge efforts along with all the branches. Enjoy the series, guys, and have a nice day. Thank you.
Thank you.
Indeed,
Thank
on
you.
indeed
Thank
on
you.
behalf of
Yeah, I also would like to thank Rajesh Bhai and Vaibhav ji for this opportunity, and looking
Thank you,
forward that
Sairam. Thank you. Thank you, Vaibhav.
Thank you.
indeed it was a great session, a knowledge-packed session, and I would surely thank Sandeep sir for sharing his anecdotes and various other experiences which have led to the practical applicability. I look forward to see all the student participants for the next upcoming sessions. Thank you, everyone. Thank you, Rajesh sir. Thank you, Vaibhav sir, and thank you, Sandeep sir, for joining us virtually.
Thank you.
I
See you all.
hereby conclude
Yes.
this
Yeah, yeah.
session.
Bye.
thank
Bye.
you.
Bye.
Thank you.
Good day.